So longtime Oak Harvest YouTube viewers are gonna have to wait a little bit for the messaging of this, but I think you're gonna be pleasantly surprised. So the sequel to one of my favorite movies of all time comes out in a few days. It's been more than a 25-year wait for the sequel to the 1986 hit movie Top Gun. Its sequel, Maverick, will be released on May 24th. Here's the link to the movie trailer in the description below. The timing of the Top Gun Maverick movie release couldn't come at a more exciting time in the life of the Perras family. You see, I'm super proud of my two sons, Kyle and Aiden, who now have both graduated from Georgia Tech with highest honors. Just 2 weeks ago, my younger son, Aiden, graduated with a perfect 4.0 grade point average with a major in industrial engineering. Georgia Tech has had the #1 ranked school in the nation in industrial engineering for decades. Yes, it's ranked in front of the likes of Stanford, MIT, and other renowned engineering schools. Yet, instead of taking his 4.0 grade point average in engineering into the private sector, he has instead been commissioned into the Navy as an ensign. Here's a picture of Aiden being sworn in Atlanta. The kicker? He's been accepted into the Navy's flight training program, and he'll be reporting to Pensacola shortly to begin Naval Flight School. One day down the road, he hopes to protect me, you, and your rights from the skies above. I'm Chris Perras with Oak Harvest Financial Group in Houston, Texas, and welcome to our weekly Stock Talk podcast. Before we get into this week's topic on financial planning and continued recent market volatility, please take a moment to click on the subscribe button and click on the notification bell so you'll be alerted when our team uploads our latest content. The first half of 2022 has been anything but fun for anyone, including our investment and financial advising teams here at Oak Harvest. We'd expected a first half correction and high volatility. We laid this out as a scenario back in November of last year. Even so, our team didn't expect this mid-second quarter bout of weakness, which led the market to drop minus 19.9% from the absolute perfect top to the dead-on low before bouncing and now sitting down around minus 15, minus 16%. While we did expect us to approach a bear market correction level in 2022, which is defined as minus 20% in the S&P 500, our team had expected this part of the market's drawdown to come in the historically slow and economically weak third quarter. I'm sure you're asking yourself, what do action movies like Top Gun have to do with the markets, long-term investment management, and financial retirement planning? Well, here's where I'm going to go. In the first Top Gun movie, there's a scene where Maverick, played by Tom Cruise, gets impatient flying behind Iceman, his wingman, played by Val Kilmer. The link for those who don't remember that action scene is in the description below. If you recall, the personality of Iceman throughout the movie was measured, calculating, calm, and slow to act in an extreme way. His method was to plan for a mission up front thoroughly, knowing that there was always danger on the horizon, but using his expertise, training, planning, and past experience, it would see him through safely and positively to the other side. Maverick, on the other hand, of course, was the complete opposite, hence their rivalry. He was skilled, but he was brash, emotional, prone to quick, seat-of-the-pants decisions. While it worked out for him many times, it did not work out for him when it mattered most. In the prior scene, Maverick, played by Tom Cruise, gets impatient with Iceman, played by Val Kilmer, and he calls him off his path, wanting the kill for himself. Maverick flies through Iceman's jet wash, causing a flame out in Maverick's own F-14 engine. Maverick's jet enters a flat spin, which he can't pull out of. He and Goose are forced to eject from the plane. So the exchange between Goose and Mav goes like this. Goose, this is not good. This is not good, Mav. Mav, I'm pinned forward. Goose, I can't reach the ejection handle. Mav, Goose, you're gonna have to punch us out. I can't reach the ejection handle. Eject. Goose, I'm trying. Mav, eject, eject, eject. Watch the canopy. Of course, Goose's head hits the canopy and he dies on impact. We spend the next half hour of the movie wondering if Maverick will ever recover and get back in and engage in battles. As we know, his skills as a pilot are near unmatched. Well, back to today's current stock and bond markets. So essentially, for the first half of 2022, we've sort of entered a flat spin in the stock and bond markets. a situation that does happen in many years, even during secular bull markets. And no, it isn't fun or exciting like the upward volatility we experienced for 18 months, from the second half of 2020 through year-end 2021. And no, we nor anyone else knows exactly when and where it will end. But my question to you is this: do you have a financial plan, or do you just have an investment account? Have you sat down with your financial planner or advisor who put your financial situation through stress tests and scenario analysis? That's what our financial planning team does here at Oak Harvest. We use planning software scenarios that model both good times and bad to determine what's your long-term asset allocation in stocks, bonds, real estate, and insurance products should be to meet your retirement goals and needs first and your greed second. See, as an investment guy, I have 20, 30, 40 graphs and charts to show you that periods of extreme volatility, like the period we are currently in, are usually the exact wrong time to make major shifts in your long-term equity allocation down. But does that calm your nerves and emotions enough for you not to make emotionally driven decisions that over your investment and retirement time horizon won't hurt your overall outcomes? Here's one graph that says historically, over the last 20 years, this current environment is statistically near the exact right time to be adding to both stock and bond positions, not selling either. This is a chart from Lipper Analytics that shows over the last 6 weeks, over $44 billion has been withdrawn from equity funds and almost $40 billion has been taken out of bond funds. That double withdrawal whammy has only happened 3 times over the last 30 years. Those times were mid-January 2016, mid-December 2018, mid-March 2020, and now. Those 3 times were 10 trading days, or about 2 weeks from the bottoms that were put in before the markets went on to make new all-time highs over the next 6 to 15 months. Bond market volatility, which led this downturn starting late last year, looks now to be peaking along with real-time inflation break-even interest rates. These data series have been good at forecasting lower volatility, not higher volatility, coming up over the next months and quarters, not days or weeks. Our investment and planning teams at Oak Harvest want to stress that periods of high market volatility are not the times to make emotionally driven decisions and to punch out or eject from what is supposed to be a long-term financial or retirement plan using long-term financial tools such as equities. Our investment team runs diversified equity portfolios for our clients. We believe that at times, higher growth stocks without dividends will be the market's favorites, and at other times, more value-oriented, boring, low-growth companies might be in vogue. We try to blend these two styles, knowing that in market corrections, like the one we're in on the S&P 500, or bear markets, as the NASDAQ has endured, there are few, if any, real places to hide. Hiding is not something one should be trying to do in the equity markets. That's not how they're structured. You should either subscribe to the value of the equity markets, our economy, and good businesses to compound your investments over years and decades, or you should look to find lower risk and lower return alternatives elsewhere. The number one rule in investing in equities is long-term compounded returns are about time in the market, not market timing. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs and risks instead of focusing on the past. The future is always uncertain, and that is why our advisors and retirement planning teams plan for your retirements and needs first and your greed second. Give us a call here at Oak Harvest to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals and your needs. Call us here at 877-896-0040. We're here to help you on your financial journey into and through your retirement years. I'm Chris Perras, and from the whole team here at Oak Harvest, have a blessed weekend.